The Japanese market, once an unbeatable giant, now finds itself in a spiral of uncertainty and turmoil. Companies that once dominated the global stage are struggling to stay afloat as investors around the world watch apprehensively on their every move. What's behind this unexpected drop? Internal and external economic factors intertwine in a complex web that threatens to redefine the future of one of the world's largest economies. Controversial policies, a declining demographic, and global challenges are undermining Japan's economic foundations. The economic bubble of the 1980s was just the beginning of a series of events that brought the Japanese economy to this critical situation. The monetary stimulus that promised to rescue the country now seems insufficient in the face of an increasingly challenging reality. Poor policy decisions and a lack of deep structural reforms have left the Japanese market vulnerable to external shocks. The instability in Japan is not an isolated problem. The impacts reverberate globally, especially affecting the United States. U.S. companies, dependent on partnerships with Japan, are on high alert. How might the Japanese market crash influence the U.S. economy? What are the risks for investors? And more importantly, what can be done to prevent a total collapse? This is a riddle that needs to be unraveled urgently, as the consequences may be deeper and more lasting than one imagines. 1. The rise and fall of the Japanese market. What went wrong? Japan, once considered a pillar of global economic stability, is now facing a crisis that few could have predicted. The warning signs were there, hidden in plain sight, but many chose to ignore them. From the economic bubble of the 1980s to recent monetary policies, Japan's trajectory has been a roller coaster ride. The Japanese economy, once an example of success, is now struggling with deflation and stagnant growth. The question is, where exactly did things start to go wrong? Aggressive economic policies, such as Abenomics, promised to revitalize the Japanese economy. However, these policies have brought more volatility than stability. The approach of monetary and fiscal stimulus, combined with structural reforms, initially looked promising. But over-reliance on public debt and failure to implement meaningful changes in the labor market and corporate structure have resulted in slow and unsustainable growth. Japan finds itself at a crossroads, with critical decisions to be made to avoid a total collapse. In addition to domestic policies, external factors have also contributed to the instability of the Japanese market. The trade war between the United States and China, for example, has negatively impacted Japanese exports. The COVID-19 pandemic has exacerbated these issues, disrupting supply chains and reducing global demand. Japan, which relied heavily on its export sector, saw its economic foundations shaken. The combination of internal and external factors has created a perfect storm, pushing the Japanese market into a phase of unprecedented uncertainty. 2. Global impacts. How instability in Japan affects the United States. The global economy is more interconnected than ever, and instability in a major economy like Japan's has global repercussions. For the United States, the Japanese economic crisis poses a significant risk. U.S. companies with deep ties to Japan are feeling the effects. Sectors such as technology, automotive, and manufacturing are particularly vulnerable. The drop in Japanese demand could lead to a reduction in U.S. exports, affecting U.S. profits and jobs. The instability in Japan also impacts the global financial market. U.S. investors, who have traditionally viewed Japan as a safe haven, are now reassessing their strategies. Volatility in the Japanese market could lead to a flight of capital to other markets considered more stable, such as the U.S. However, this migration of investments can inflate bubbles in other sectors, creating new risks. Economic interdependence means that turmoil in Japan could send shockwaves through Wall Street and beyond. In addition to the direct economic impacts, the crisis in Japan could have geopolitical implications for the United States. As close allies, the U.S. and Japan share strategic interests in Asia. Economic instability could weaken Japan's position in the region, affecting the balance of power with China. The U.S. may be forced to intervene more directly to support its ally, increasing American involvement in Asian issues. The Japanese crisis, therefore, is not just an economic issue, but a multifaceted challenge that the U.S. needs to approach with caution. 3. technology and innovation. Is Japan losing its competitive edge? Japan has always been a beacon of technological innovation, leading the world in robotics, electronics, and automation. However, recent economic instability is putting this leadership at risk. Japanese companies that were pioneers in technology are now struggling to maintain their relevance. The economic slowdown has affected investments in research and development, a crucial factor for continued innovation. The urgent question is, can Japan regain its place at the forefront of technology? Global competition is intensifying, with countries such as China and South Korea making significant strides in technology. U.S. companies are also capitalizing on Japan's weaknesses by expanding their market shares in previously Japanese-dominated areas. The scenario is increasingly challenging for Japanese companies, which need to innovate quickly or face obsolescence. Japan's loss of technological advantage is not just a business crisis, but a national problem that could redefine its economic future. Despite the challenges, there is a determination among Japanese companies to reinvent themselves. Startups are emerging, bringing new ideas and approaches to technology. The Japanese government is also stepping up its efforts to support innovation by offering tax incentives and promoting public-private partnerships. The battle for Japan's technological recovery will be intense and difficult, but there is a growing belief that with the right strategies, the country can return to being a global leader in technology. 4. The role of government policies in the Japanese economic crisis. Political decisions shape a nation's economic destiny, and Japan is no exception. In recent years, Japanese government policies have been a point of controversy and debate. Abenomics, former Prime Minister Shinzo Abe's economic strategy, sought to revitalize the economy through monetary, fiscal stimulus, and structural reforms. However, the implementation of these policies has encountered significant obstacles, resulting in fragile and volatile economic growth. Where exactly did the Japanese government go wrong? Japan's expansionary fiscal policy has led to a significant increase in public debt. While the stimulus initially boosted the market, the lack of deep structural reforms weakened its long-term effects. A rigid labor market and resistance to changes in traditional corporate practices have hindered sustainable growth. The Japanese economy has become dependent on continuous stimulus, creating a vicious cycle of debt and stagnation. The failure to address these issues head-on has put Japan in a precarious position. In addition to internal failures, Japan has also been affected by external events beyond its control. The trade war between the United States and China, the COVID-19 pandemic, and global geopolitical tensions have all contributed to the instability. The Japanese government's response to these challenges has often been slow and insufficient, exacerbating the crisis. The need for a new policy approach is clear, but finding the right one will be a monumental challenge. The world is watching how Japan will handle this crisis and what lessons can be learned to avoid future economic disasters. 5. Demographic change. The challenge of Japan's aging population. Japan is facing an unprecedented demographic crisis. With a rapidly aging population and a plummeting birth rate, the country is in a race against time to find viable solutions. The impact of this demographic shift is profound and multifaceted, affecting every aspect of Japanese society, from the workforce to the pension system. The question is, how can Japan sustain its economy with a shrinking and aging population? The aging population puts enormous pressure on Japan's health and social security system. With fewer young people to support the growing elderly population, social costs are skyrocketing. The shrinking workforce means fewer taxpayers and a greater burden on the remaining workers. This imbalance is undermining the country's economic stability, creating a cycle of dependency and decline. The Japanese government is trying to mitigate these effects with looser immigration policies and incentives to boost the birth rate, but the results have so far been limited. Japan's demographic situation also offers an important lesson for other countries, including the United States, which face similar demographic challenges. The intersection between demography and economics is complex and requires innovative approaches. The U.S. can learn from Japan's mistakes and successes to develop its own coping strategies. However, time is running out for Japan, And the next few decades will be crucial in determining whether the country can reverse this trend or continue to slide into an even deeper crisis. Clouds of uncertainty continue to hang over the Japanese market. With each passing day, new questions arise, challenging economists and investors to find answers. What will be the next steps for Japanese companies to regain stability? The global economy is at stake, and all eyes are on Japan. The battle for economic recovery promises to be long and full of twists and turns. But what happens if current measures fail? How might Japanese instability set off a chain reaction that affects economies around the world? The United States, in particular, is in a delicate position, with its economic ties deeply intertwined with Japan. Are we on the brink of a new global financial crisis? These are issues that no one can ignore. As we try to decipher the future of the Japanese market, one thing is certain: the answers we seek are far from simple. Every decision, every move, can change the course of events. Japan is at a critical crossroads, and the world is about to witness a struggle for economic survival. Stay tuned, because the next chapters of this story will be decisive for the future not only of Japan, but of the global market as a whole.